Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Thursday, January 4th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's jump into the charts. I'll start with the big picture, work my way into the day itself. Just a reminder that we've had a long-term buy signal last May above the mid-160s, this longer-term channel structure here, that we actually retested following the July high. We tested it a couple of months ago, back in October, preceding that by a month. It's been holding nicely. I don't expect to see it again unless we were to close over the next week or so below 180.10, which I'll get to in a moment. But following the testing of the mid-160s back in October, we then, within a month, closed above this descending channel top, this descending flag at the top of a previous high, still solid support at 180.87. There's a lot going on in the very low 180s. You know, the same formation on the daily chart is that the daily chart right here is at 180.10. And I can also see that if you see the 180.35 here lower right, that is a rising 2/3 speed line coming up as well. And we actually closed below the rising 1/3 speed line about a week ago. 5 trading days ago. This was the big sell signal over the last about a week and a half ago. It was like a 2-day event. The first was closing below the channel bottom and then below the speed line 2 days later, and that set up a 3 to 5 week sell signal into the low 180s, which is playing out as a 3 to 5 day high volatility sell-off. And we may actually test this area today. 182.65 can contain intraday weakness. 182.65 is a respectable 50% downside retracement from the October low against the more recent December high. We could bounce there on an intraday basis, possibly a daily low, but keep in mind that we are expecting that 180, 181 handle support, and if we break or open today below 182.65, this area should be tested today. In fact, I can see it right here. I don't know why in a previous chart, I was sort of describing the rising 2/3 speed line, and here we are, 180.10 to 181.35, able to contain selling not only through the rest of January, but possibly through the rest of the first quarter. We can round up from here nicely back to, well, I can tell you right now, near term, I've got a descending 2/3 speed line that's coming down. This has been such a steep sell-off that I like finding the softer angles of descent on these line studies. I could find channel tops and things coming down, but it really is this descending 2/3 speed line that is right now at 193.76 that I see as, once we test the low 180s, we can round back up into the low 190s within 1 to 3 weeks, depending on volatility. Lower volatility should be about 3 weeks. High volatility bounce could be certainly within a week. We could push into the low 190s. This descending 2/3 speed line dropping daily, it gets recalibrated every single time we put out a new low. So if we break yesterday's 183.43 low, and we very well may, this speed line gets recalibrated. And as long as the descent isn't significant from there, the line study only changes marginally. So anyway, enough of that. Let's go to the upside today, 185.88, intraday resistance, nothing more than Wednesday's high. And I see that as a pivot point in itself because it's the move low so far following that high from a couple of weeks ago. pushing or opening above 185.88. I could see a short cover rally perhaps to 188.36. Given the significance and the quickness of this sell-off, we can quite easily spring up to 188.36 on an intraday basis. This former channel bottom, well suited to contain daily buying pressures, is also consistent with this gap high from Tuesday, able to contain daily buying pressures. And by the way, at 188.36, we just might top out into early next week, and from here continue south back into the low 180s within, well, by the end of next week or sooner. Now, closing above 188.36, I see no good reason to be short Apple over the next few days. That's where the 3 to 5 day swing trade comes in. 3 to 5 day swing traders can sell 188.36 right now in anticipation of the 180.10 to 180.87 region. And inversely, if we close above 188.36, don't be short. In fact, 3 to 5 day swing traders are long up to 193.76. In fact, that could be within 1 to 2 days. 193.76, able to contain weekly buying pressures, and from there we could fall off again back into the low 180s, possibly within 2 to 3 weeks. But if we test the low 180s, I will see the 193.76 level as just kind of a mere hesitation point on the way up to what I consider to be full and complete recovery, onward and upward to new highs. So, if we test the low 180s, sure, within 2 to 3 weeks, this 193.76 descending speed line in reach, able to contain weekly buying pressures, and if settled above, should mark a nice pivot point as we move into later January. Under that scenario, I would expect kind of the 205, 210 region. There is, and I don't think we show it here today, but there is a new rising channel top that is based in part on yesterday's low. I can kind of describe it, just a trend line like this off these lows, that angle of rising, just like that. And that'll take you around 205 now and rising. So if we close above 193.76, that 205 area and rising expected. I will also say that if we test the low 180s, this is a meaningful support area. And so if you've been short for the last 2 weeks, if you've been short for not the last 2 weeks, for the last week since we had, that sell signal below the 196 area. At that time, it was more like 192, as I recall. If you've been short since then, not only are you covering your short positions in the low 180s, but you can then also, especially if you're like a 3 to 5 week, 1 to 2 month swing trader, you can buy the low 180s in anticipation of that rising channel top I described vaguely just a moment ago. So that could mean either just going long the stock, you're holding out for the low 200s, 205, 210, or as we test the low 180s, you might actually reach for 210 out of the money calls, 210 strike out of the money calls that don't expire. I would go 3 months out on that. I think that's more of a 1 to 2 month play, but you could go 3 or 4 months out on the strike price expiration. Of course, if we close below 180.10, this thing should continue unraveling over the next 3 to 5 weeks or sooner back into the mid 160s. So once again, if we close the week, let's say below this 180.10 descending channel top on the daily chart, 180.87 on the weekly chart, I think we've got a 3 to 5 week sell signal back into the mid 160s, where we can once again bottom out well into 24, into later 24. But until then, this area just may win the day, so to speak, in terms of containing selling pressures into the second quarter, and from here we can round back up again. Let me go back to the day itself just as a reminder. And that is to say that if we do close today above 188.36, good low for the week, we should then within several days, 3 to 5 at the most, test 193.76, where by that point in time we could top out through next week and fall away again. And if settled above 193.76, that's a good January low. I would expect the 205, 210 area within 2 to 3 to 5 weeks of closing above 193.76. I hope that all made sense. I'm going to leave it at that for Thursday's Apple report. Please click like, share, subscribe. Check out wickedstocks.com for our 5-day free trial. I'll be back tomorrow with Friday's Apple report. You have a great day.